Okay, let's welcome our next guest on the show as well. Varun Goel is joining in, Assistant Vice President, Fund Management Division at KC Securities. Varun, afternoon, 50-80 on the Nifty, huge bout of short covering underway. Can we actually go into the weekend much above 5100, you think?
Good afternoon, Rahul. I think as far as the broader markets are concerned, we are trading very close to the fair value. I think considering the Sensex earnings around 1100 rupees for FY11, we are trading close to 15 times, which I think is very reasonable in a scenario where the earnings growth is expected to be at the order of 25 to 30% year on year. I think, having said that, although Indian fundamentals look quite good, the things in Europe still continue to be very fluid. We heard what the Hungarian Prime Minister had to say last week. It seems, at least for the timing, there is no end to the bad news coming out of Europe. So we would want to be really careful at this point of time. We are maintaining around 20% cash in various portfolios that we are running, and I think we would want to continue to hold that at least for till we see more clarity as to what's happening in Europe and in China.
Are you surprised by the relative strength the auto sector is showing day after day? I mean, you've got a Tata Motors up to 760, Hero Honda is up to 2100. Even ancillary stocks like Bharat Forge have gone up about 8-10% in 2 days. Is this a sector worth going overweight on despite the run-up?
I think Rahul, automobiles as a space has been doing quite well for last 1 year. In fact, if you see month-on-month numbers coming out, we have seen a very robust growth even in April and May, which are traditionally supposed to be weak months. I think the industry is all set for about 35% growth as far as the commercial vehicle segment is concerned, and at least 20-25% growth as far as the two-wheeler segment is concerned. I think the IIP data which is going to come out tomorrow should also continue to be good. So we are seeing a very robust industrial recovery. So clearly commercial vehicles are going to ride that, and of course all the ancillary industry, especially the battery space and a few other components, are definitely going to benefit. So we continue to be overweight on this sector.
Within this sector though, if you had to break it down into two-wheelers, passenger vehicles and commercial vehicles would be your pick?
We like both the leading companies in the commercial vehicle space. We also like the two-wheeler segment, especially people who are continue to gaining market share from the market leader. The only space in which we are a little circumspect is the four-wheeler segment, because we believe that considering that almost all the major global automobile companies are going to be present, so the competition might be quite intense, which might have a very negative impact on the margins. But the other two segments continue to look very good.
How are you approaching oil marketing companies, HP, BP, IOC, in the light of this fuel price hike being deferred yet again at the cabinet meet today?
Rahul, this is a story which every 6 months we hear that is going to happen. I think there have been more than 3 commissions in the last 10 years. I don't think full fuel price deregulation is something that one should expect. What one can expect at the most is some cosmetic changes in petrol and diesel prices. So I would rather sell into any upward movement in oil marketing companies rather than buy.
Has telecom turned the corner for you, or is it still looking circumspect? Last time you said you would still look at avoiding it, but how are valuations looking to you? Because you've got a Bharti that's gone up what? About 12-13% in about 2 or 3 trading sessions. Relcom has shown signs of short covering. Idea has too seen some bouts of short covering. Is it looking good for a short-term, perhaps covering play?
Well, I think, Rahul, as far as the telecom space is concerned, the fundamentals continue to be very weak. I think most of the companies, the top companies, continue to trade at 12 to 13 times 1 year forward earnings, and it is still not very clear whether we will going to see those earnings, because every day we hear new news about price competition. We have seen these companies going for a significant amount of debt for 3G. So as far as we are concerned, there is no change in our stance on the telecom space, and we will continue to avoid the space for next few quarters.
What about real estate?
That's something that looks very interesting at this point of time. I think the valuations, especially for the large cap stocks, which are companies based out of metros, the residential real estate seem to be doing quite well, and the prices there, both in Delhi and Bombay, seem to be holding up quite well. So that's a space in which we think there's a lot of value emerging, and selectively one can definitely look at buying the large cap names.
You are more comfortable with large cap real estate or mid cap real estate at this point?
Well, I think, Rahul, as far as the real estate space is concerned, there are 3 things that one would want to look at. One, we are looking at only metro-based plays, companies which are into residential real estate. Second, we're still not very comfortable in terms of whether the commercial real estate has really turned the corner. We see still overcapacity as far as office space is concerned, especially in tier 2 cities like Hyderabad, Bangalore and Chennai. And third, we like companies which have a historical land bank rather than companies which purchased land during the boom time of 2006 and 2007. So if we take into account all these factors, we are mostly left with companies which are based out of Delhi and Bombay, which are large cap names geared towards residential real estate.
What about pharmaceuticals? We had lots of news flow with the Piramal deal. We've had enough by way of Glenmark, lots of announcements on milestone payments. Is this space looking interesting, perhaps going overweight on?
Well, selectively, pharmaceutical space continue to look good. We like companies which are geared towards domestic formulations rather than companies which are more into contract research and that new molecular entity space. I think there's one very big risk as far as those whole drug discovery space is concerned. The market seems to be discounting that all the stages will be done to perfection and the income is going to come. The way I would want to look at it, it is more like an option value. When you are going for a new drug discovery or a new chemical entity research, you may go right for 9 steps and you may fail at the 10th and it will all amount to 0. So I think one needs to be very careful when one is looking at that space. But otherwise, the domestic formulations and pure contract manufacturing operations, those segments continue to look good.
What about commodities, both on the ferrous and the non-ferrous side? Any opportunities emerging? Are valuations looking okay after the huge fall they saw in the May series and the beginning of the June series as well?
Well, the commodities now, of course, have taken the biggest brunt of the global correction that we've seen in the last 2 months. I think most of the non-ferrous commodities have corrected to the extent of 20 to 25%. We are now almost at that stage where the marginal cost of production seems to be higher than the selling price that are available in the market. So I think from a fundamental perspective, the commodities and therefore the stocks geared to them do look to be trading at reasonable valuations. But having said that, we're still not clear, we're still not sure what's going to happen in Europe and China, and what we have seen in last 1 year, the prices on the way up also overshot the fundamentals by a significant amount, and I think they can do that on the downside also. So I would tend to be cautious on that sector at this point of time.
What about banks and financial services? We're fast approaching the regime of the base rate. We have the IP numbers, as you said, tomorrow, and then July even has a credit policy waiting for us. Lots of talk about inflation, where the yield could be headed. How are you looking at banking and financial services at this point?
Well, I think the banking space has continued to do very well in last, even in last 2 months when the market overall has been correcting. I think if you look at the credit growth expectation, the RBI has guided for a 22% growth on a year-on-year basis. Our sense is that it is going to exceed that. Most of the good private sector names, the large cap names, should show credit growth to the extent of 25% or even more. I think with the NPA still under control, especially for private sector banks, and a decent ROE of 20% plus, I think the banking space continues to look very attractive. Although we will be a little cautious in terms of the large cap public sector names, because it seems that they're going to have some issues in terms of the NPLs coming in, at least for the next couple of quarters. But I think even in PSU space, the small cap names, we have seen a lot of private sector banks rejigging their operations, becoming more efficient, getting all their operations online and all that. So the re-rating stories for the small and mid cap PSU banks still seems to be paying out. So that's another space that we like.
Okay, Varun, we'll leave it at that for this afternoon. Good speaking with you as always. Thank you so much for taking time and joining us. Varun Goel there with his thoughts on the markets.